Greetings, members one and all of the Salivation Nation. According to a report, silver and gold will fall from now to the end of 2021. Do you believe it? Well, let's explore. That's right. This report says that gold and silver are going to start falling from here to the end of this year. Now, what kind of report would say that when most analysts out there have been pretty bullish on precious metals? Things are getting a little bit fuzzy and blurry when we think about prognostications and predictions. And as you know, I've made my predictions at the beginning of the year, and I'm sticking with them. That does not mean that I'm going to be right by any stretch, but we have seen gold touch up above $1,900 an ounce, and silver has been well above $28 an ounce back to the end of May and here into June. So what does this mean, this report? What is it about? Well, this is from Kitco, and is from an organization called Capital Economics. In this report, they say that May was as good as it gets for metals this year, including gold and silver's price. Most industrial and precious metals will end the year lower than at the current levels, said Capital Economics in this report. May was a stellar month for metals across the board, with gold being one of the best performers. We did see it cross that $1,900 level, and it surged nearly 8% on the month. However, this bullish trend is very unlikely to last, said the Capital Economics Commodities team. The report cited slower growth in China and the threat of rising yields as some of the reasons behind the bearish outlook. We did see yields rise a bit in the last week here, and that's partially had an effect on bringing some of the prices down, but then there was a recovery. It goes on to say that we suspect that this may be as good as it gets. After all, if we're right in expecting economic growth in China to slow in the second half of the year, the prices of most industrial metals are likely to end the year lower because of less demand, is my guess. Commodities Economist has said on Thursday that meanwhile the recent rise in the gold price has been far larger than is implied by the fall in real yields, and we think that the gold price will come under renewed downward pressure in the months ahead as real yields start to creep higher. So they're kind of basing it off of that. That's one of the foundations of their analysis here. Both industrial metals and precious metals will retreat significantly by year end, they specified. Despite the further gains in industrial metal prices, investors in the futures market have continued to reduce their net long position. And while China imports of refined metal have remained reasonably strong, the end of the restocking season is likely to weigh on imports going forward, the report said. From the base metals, Capital Economics projects for copper to end the year at around $8,000 per metric ton, aluminum to $2,000, nickel at $15,000, and tin at $24,000. Strong demand from the electronics sector and a sharp decline in exchange stocks boosted the price of tin in May. However, demand for electronic goods is likely to ease as lockdowns are steadily lifted, which is one reason why we expect the price of tin to fall by the year end. That's an interesting analysis there, because they're basically saying that the demand for electronics picked up during the lockdowns and that we won't be buying as much. I guess I could see both sides of that, but in the precious metals sector, gold will wrap up the year at $1,600 an ounce, they say. Silver at $21.50 an ounce, platinum at $1,000, and palladium at $3,000, which is higher than where it is now, according to this report. Capital Economics even estimates gold to fall below $1,600 an ounce next year in 2022. In a reversal of the trend seen for much of 2021, the prices of gold and silver outperformed those of the platinum group metals in May. Despite broadly stable U.S. real yields, the gold price rose due to the weaker dollar, home safe haven investment flows, and strong physical demand from Asia, the report noted. In any case, the strong physical demand in Asia is unlikely to offset the downward pressure on gold and the higher U.S. real yield we expect. So I believe this report is flawed, and I'll tell you why. Because, as a buyer, I'd love to see $1,600 an ounce for gold and $21.50 for silver. But I believe this report is looking at it mainly from a commodities standpoint. And yes, if there's less demand, especially from China in the year, well, I could see why they could say that. But also, that's just China. China also supplies products to other parts of the world, and one of those areas is photovoltaics for silver, and I think that demand will continue to be strong. And I believe there's other sectors of the economy that's going to put pressure on commodities, and some of them obviously are produced in China. The rising yields, yeah, that could play some part too. It does, but it all goes back to that dollar index for sure. And so that's something they're not taking into account and considering here, because I believe it's coming into focus that we're going to see gold and silver rise this year, continue their upwards movement and upwards trend because of not only those factors, but the dollar index is going to play a crucial role in these metals, because not only are they commodities, but they're also monetary metals, safe haven, stores of value, assets in that regard. And so therefore, I believe because of the fears of inflation, we are going to see prices continue to be where they're at or go higher, which is why I still stand by my predictions earlier in the year, where I basically called for gold to touch $2,000 before the end of the year, and for silver to touch between $30 and $35 between now and the end of the year. It's a bit of a stretch to see silver go there, probably more so than gold. But I do believe that as demand picks up for the metals, even on the industrial side for silver, that we're going to see the prices rise. And if we see continued buying from precious metals enthusiasts and those who want to preserve their wealth with physical silver, I do believe that sooner or later that's going to rock the spot price as well. It may not be as much as some people think it should, but I believe that it will have an effect, and we will see the continued rise there in silver, and maybe even so much so that it narrows the ratio down to the low 60s again. And we'll see. But nonetheless, I do disagree with the report. I think it's short-sighted, as it only is referring to the metal as sort of a commodity, hence why it's from the commodities team at Capital Economics. But you're going to hear things like this from various different sources. There's opinions are, like they say, like sphincter muscles on the anal region, the posterior region of most human beings. Everyone has one, and so therefore that is something that we will certainly take into consideration. And by the way, I include myself in that. I have an opinion too, and I don't think my opinion should weigh too much on your decisions to buy or sell precious metals. I'm just expressing the opinion. Do your own due diligence and research out there for sure. But it is fun to talk about, and this is essentially for entertainment purposes, but also for educational as well. And I think it is interesting to see what the different viewpoints are out there. And I certainly kudos to Kitco for expressing the various and a variety of different viewpoints. And I like to cover them as well. And this is one of those that are relatively bearish on gold and silver, and I disagree, and that's fine. But it'll be interesting to see how it plays out through the end of the year. We'll find out. But I'm curious to see what your thoughts are on this. Let me know in the comment section below. And before you go, I would encourage you to hit the notification bell and also the thumbs up button as well. It helps if you do those things, especially the thumbs up, and subscribe, because it does help with the engagements, to get the algorithm to catch on, because I think that's what it's about. It's about spreading the message about precious metals, and that's kind of what we're about here. And so there you have it. Let me know your thoughts in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.